You're welcome to Wapic Insurance PLC's Half-Year 2018 Investor Analyst Conference Call. My name is Bode Ojeni, Executive Director of Sales and Distribution, and I'm being joined today by Mrs. Yinka Adekoya, Managing Director, Wapic Insurance PLC, Mr. Dayaro Jolu, Managing Director, Wapic Insurance Ghana Limited, Mr. Olufemi Obaleke, Executive Director of Subsidiaries, Mr. Technical Division, Wapic Insurance PLC, Mr. Adewale Koko, Executive Director, Technical Division, Wapic Life Assurance Limited, Mr. Oluseyi Taiwo, the Chief Financial Officer of the company, Mr. Olushola Ojeniyi, the Chief Investment Officer, Ms. Zina Giwamu, the Head Digital and Technology Division, Ms. Toyin Aziz, Head Strategy and Investor Relations, Mr. Aina Akintunde, the Head of Customer Experience Group, and Mr. Patrick Osadebe, the Head of Retail Division. For your information, the half-year results being presented at this session was published last week in the National Dailies. During this call, we will discuss our business outlook and might make forward-looking statements. These statements and comments are based on our expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties. But before we jump into the presentation, just a few housekeeping matters. We are streaming live, and as such, the presentation is shared on your desktop and laptop. At this time, we advise participation to be on listen-only mode. I would therefore request that you kindly mute your microphone so that you can hear us clearly, and such that background noise does not interfere with the audio. At such a time as the presentation is concluded, we have left ample time in the agenda for questions. Instructions for participation in the Q&A will follow at this time. We will also take questions that come in via the chat feature on Webex. During the Q&A session, please limit yourself to one question and possibly one follow-up question. We will attempt to moderate the questions as seamlessly as possible. As a reminder, this conference is being recorded. Thank you very much. We'll move on to the slide that speaks to the outline of the presentation. We'll be speaking to Wapic Group in general, the operating environment, the regulatory environment. We'll then take a look at the financial overview and then come back to look at how we see the future. I'll be taking you through the first three segments about Wapic, the operating environment and the regulatory environment. Therefore, we'll take us through the financial overview. I will then be back to present to you the future outlook and how we see it. Moving on to slide 4, which speaks to details about Wapic Insurance Group. We operate three entities: Wapic Insurance PLC, which is the holding company, Wapic Life Assurance Limited, and Wapic Insurance Ghana Limited. And we have one associated company, Coronation Merchant Bank. We have in total assets 34 billion and total asset management of 1 billion naira. Thank you. We have 206 professional staff, total of 13.4 billion ordinary shares of 50 kobo each in issue, and we have in excess of 850,000 shareholders. We operate through 6 regional offices located in Abuja, Benin, Enugu, Ibadan, Port Harcourt, and Kano. We're listed on the Nigerian Stock Exchange, and we have a GDR depositing bank with the Bank of New York, Mellon. Our market capitalization as at date is 6 billion, and we are rated by AM Best. Our current rating financial strength is C++, while our usual credit rating is B+. Our reinsurers include Munich Re, Africa Re, Waika Re, Continental Re, Nigeria Reinsurance Corporation, and Ghana Re. Our actuaries are EY and QED, while our auditors are PwC. Moving on, I'll be speaking to slide 5, which talks about the operating environment. And I'll be speaking to this under 4 topics: GDP growth, crude oil, inflation, and FX rate. On FX rate, Naira at the interbank depreciated by 10 kobo to the dollar quarter on quarter as of June 2018. At the parallel market, the Naira equally depreciated due to pressure for portfolio outflows. We expect the CBN to continue to intervene in the secondary market in order to keep the Naira attractive. On inflation rate, the country is further to 11.23% in June 2018 from 13.34% recorded in the previous. The current rate, although still above the CBN target range, is the 16th consecutive decline in headline inflation, riding on the back of effect. The country's GDP grew by 1.94% year-on-year in real terms in the first quarter of 2018. This shows a stronger growth when compared to the first quarter of 2017, which recorded a negative growth of 0.91%, representing an increase of 2.8 percentage points. It is the 4th consecutive quarter of expansion as the oil sector continues to rise, while the non-oil output grows slowly. On the crude oil side, Nigeria's burning oil price enjoyed an upward trajectory to the high of $79.12 per barrel as at end of June 2018. This impacted positively on the country's foreign reserves, rising 25.6% to 47.6 billion as at end of June 2018, compared to 37.9 billion as at December 2017. On the regulatory side, this is on slide 6. NICOM in June 2018 introduced the new tier-based minimum capital requirement for all insurance operators in the industry. The Commission specified the minimum capital of 2 billion, 3 billion, and 6 billion respectively for Tier 3, Tier 2, and Tier 1 life insurance companies, while non-life insurance firms' minimum capital was fixed at 3 billion, 4.5 billion, and 9 billion naira for Tier 3, Tier 2, and Tier 1 respectively. Companies operating in the composite segments will be required to have a capital base of 15 billion for Tier 1, 7.5 billion naira for Tier 2, and 5 billion naira for Tier 3. The new structure is expected to take effect from January 2019. The Commission, however, explained that insurance companies operating with the old capital requirements will not be forced to recapitalize, but be restricted to underwrite only certain types of businesses. Within the period, the Nigerian Stock Exchange announced that it had reviewed its equity market structure, which became effective on Monday, July 2nd, 2018. The new market structure will create a level playing field for all participants and enable investors to deploy broader trading strategies, enjoy best execution, and benefit from enhanced market depth. According to the NSE, it remains committed to maintain a platform that engenders a fair and efficient market in line with global standards. Within the period, a new code of ethics in insurance was released. This code states the principles and expectations governing the behavior of insurance practitioners. It describes the minimum requirements for conduct and behavioral expectations, and the overall objective is to make practitioners adhere to and get committed to the required ethical and professional standards. The Institute's president unveiled the new code at the just completed National Insurance Conference held in Abuja. As part of efforts to deepen financial inclusion through insurance, the National Insurance Commission is set to launch the Nigerian Insurance Industry Development Plan, NIDP. The Commissioner for Insurance disclosed this plan at the opening ceremony of the 2018 National Insurance Conference in Abuja. The NIDP would have financial inclusion as a major component, which the country's insurance industry will use to reduce the number of citizens that have been financially excluded by developing friendly premium policies. I'll now hand you over to Mr. Sheyi Taiwo, the CFO, who will take us through the financial highlights of the presentation. Thank you very much. Sheyi.
Good afternoon. I will be taking us through the financial highlights part of the presentation. The outline would be looking at the financial highlights, the income statement review, statement of financial position review, and our asset under management. Our group financial highlights. Total income increased by 15% compared to the same period in 2017, closing at 8.2 billion. We had an 18% growth in our GWP, closing at 6.9 billion compared to 5.8 billion same period 2017. Our total underwriting income grew by 44%, closing at 4.4 billion as at the end of June 2018. We had a 113% growth in our underwriting profit, closing at 1.3 billion compared to 622 million same period 2017. We had a slight decline in our investment and other income, a decline of 16%. Our expense and provisions increased by 15% for the period, while we had a 54% decline in our profit before tax. Highlights of the financial position. Our financial assets grew by 8% as at the end of June 2018 compared to our full year December 2017. We had a 100% growth in our reinsurance assets, while our total assets experienced a 19% growth, closing at 33.9 billion compared to 28.6 billion as at the end of December 2017. A slight growth on our shareholders' funds, closing the period June 2018 at 18.4 billion compared to 17.9 billion as at the end of December 2017. Moving on to slide 9. Slide 10 looks at our income statement review. Wapic's gross written premium grew year on year by 18% to close the 6 months period at 6.9 billion, an improved performance from 5.8 billion written as at the end of the same period, June 2017. We had a reduced reinsurance expense of 18% as at the end of the period, largely driven by the reduction in facultative reinsurance outward, particularly in the motor, fire, and general accident portfolios. Increased underwriting costs for general accident and oil and energy business were major contributors to the 39% growth in our underwriting expense for the period. The company recorded an impressive performance in underwriting profit for the period at a 113% growth year on year, largely driven by the increased revenue for the period. Investment and other operating income went down by 19% and 14% respectively to close at 587 million and 117 million. The drop in profit before tax was negatively impacted by the decreases in investment and other income and the growth in operating expense. Moving on to the next slide, which looks at our product performance. Oil and energy was the top performer for the period at 23% share of total GWP generated. Motor and life business portfolios followed at 17% individual contribution each. Life business was the group most profitable product as at the end of June 2018, leading with a 67% overall contribution to the total underwriting profit generated for the period. Underwriting profit margin ratios were positive for all products portfolio except fire and aviation, owing to the increased claims experience on these products during the period. Moving on to the next slide. The next slide looks at our group expenses. Under the next claims expense, the company's improved risk selection process continued to pay off, contributing to the drop in net claims expense, which decreased by 19% year-on-year to close at 1.3 billion in half year 2018 against 2.1 billion as at the same period, end of the same period 2017. Net premium income grew by 44% year-on-year, further cushioning the effect of the net claims ratio, which dropped to 49% from 59% recorded in the corresponding period. Underwriting expense. Growth in net premium income of 3.9 billion for the period helped support the decline in underwriting expense ratio, which retracted slightly to 17% from the 19% position in the preceding period. The company would continue to drive the improved efficiency in its underwriting performance, along with the growth in top-line premium production. Under our operating expense, staff and other operating expense grew by 10% and 20% to 646 million and 1.7 million respectively for the period, due to expanded operations to drive better top-line performance. Operating expense margin remained flat at 35% for the prior period. The cushion effect was mainly driven by the improved GWP performance. Our insurance expense dropped to 1.4 billion, an 18% year-on-year reduction from 1.8 billion in the corresponding period of 2017. We have continued to optimize our insurance process to adequately manage underwriting expenses. This benefit we expect to continue to crystallize through 2018. The next slide looks at our revenue. The company maintained its double-digit growth in total revenue for the period at a 15% year-on-year improvement to close at 8.2 for half year 2018. The group's growth trajectory recorded a 12% 4-year cumulative annual growth rate as at the end of June 2018. A large corporate group was the largest contributor to total revenue generated for the period at 64%. The large corporate group in Wapic consists of manufacturing, construction, telecoms and ICT, Asian corporates, and the oil and energy sectors. The Ghanaian subsidiary contributed 10% to the group's total gross written premium for the period. Wapic Ghana would continue its effective awareness drive to increase its share of the insurance market space in Ghana. Wapic has repositioned its retail group to ensure a successful implementation of its reinvented retail market penetration strategy. Moving on to the next slide that looks at our group profit position. Our underwriting profit recorded a stellar growth of 113% from half year 2017 to close at 1.3 billion for the period. Our underwriting profit margin followed in the same upward curve at the 19% growth. There was a 54% reduction in profit before tax position for the period, relatively due to the increase in operating expense and a decrease in yields on our investment income. We recorded positive return on equity and return on assets for the period. Next slide, please. We'll now have a look at our statement of financial position review. Portfolio realignment to higher yield assets led to the 12% drop in cash and cash equivalents from the December 2017 position. Growth in our financial asset reflects the company's switch from cash and cash equivalents to benefit from elevated yields in other financial securities. The increase in share of profit in associates during the period contributed to the 7% year-on-year growth from 8.2 billion to 8.8 billion for the period. The company's investment properties declined to 232 million, a 23% reduction from our full year 2017 position. Further depletion in this asset class is expected through 2018 as the organization divests to higher yield assets. There was a 43% and 8% growth in investment and insurance contract liabilities respectively for the period. These were driven largely by the growth in company's pure risk and investment-linked obligations during the period. The company closed with a total equity of 18 billion, representing a 3% growth from the full year 2017 position. The next slide looks at the highlights of our financial position. Our earning assets to total assets ratio was at 65% as at end half year 2018, a 11% reduction from the 73 position recorded as at the end of the full year 2017. Total assets for the group grew by 19% to 33.9 billion from 28.6 billion recorded as at the end of full year 2017, while earning asset maintained a relatively flat growth of 5% for the period. Total liabilities grew by 46% to 15.5 billion as at the end of half year 2018 as at against full year position, December 2017 full year position of 10.6 billion. This was driven by the growth in insurance and investment contract liabilities recorded for the period. Shareholders' funds grew slightly by 3% to close at 18.4 billion for the period. The company is solidly prepared for the commencement of the new tier-based minimum solvency capital regime released by the regulator, which is expected to commence January 2019. We'll now look at our asset under management. The group's investment portfolio position maintains a high allocation to fundamentally strong associate with a 41% portfolio share of the total assets under management as at June 2018. The investment property portfolio dropped by 23% as the organization continues to maintain its strategy to fully exit the underperforming legacy properties with more focus on securities with higher yields. Bonds had a 31% portfolio share at the end of the period under review to close at 7 billion, a growth from 4.4 billion recorded as at the full year 2017. Growth in the value of investment in associates reflects the group's share of profit in CMB. The 460% additional placements in unquoted investment were necessary to take advantage of uptick in yields. I will now hand over back to Bode Ogeniyi to take the other part of the presentation.
Thank you, Sheyi. Ladies and gentlemen, we would now look at the future outlook for the rest of the year and for the coming years. I'm on slide 21. I'll be speaking to these under 4 headings: financial, operational, sales, and people. On financials, we proactively anticipated the regulatory change in capital adequacy rules in industry, as recently announced by NICOM, and were prepared for the new tier-based minimum solvency capital regime, which is set to take effect in January 2019. Nonetheless, we continue to drive for a solid solvency margin as a group. We expect continued growth in premium performance in line with our strategic year-on-year growth expectations. We shall maintain a continuous focus on cost optimization and efficiency initiatives throughout the business in order to meet our strict target cost-to-income ratio. On our operations, we have transformed our corporate website into a world-class business platform and customer experience touchpoint to enable sales and enhance customer engagement. We are set to launch our self-service omnichannel platform for customers to conveniently connect with us. This will deliver growth in premium, increase customer satisfaction index, as well as improved service delivery and internet efficiencies. Our digital division is set to drive the group's digital strategy, including digital marketing, channels management, and data analytics and intelligence. We expect a further deepening of our retail insurance penetration countrywide as we continue to grow our customer base and agency base. We would optimize the Wapic Life offering with the launch of new products such as Analyst, funeral insurance, and the likes. We have initiated a full implementation of our bank assurance model in all major sales capitals across the country in line with growth opportunities. Also recently, we commenced the sale of our travel insurance products, adding to the company's variety of retail product offerings. On people, we are committed to being a great place to work, and we remain focused on a performance-driven organization with significant improvements in employee engagement initiatives anchored by staff and for our staff. As a foundation to our strategic drive for the best talents in industry, our investment in talent development are expected to manifest in productivity gains. We are also incorporating the behaviors, culture, and innovation associated with leading customer experience providers. Thank you very much, ladies and gentlemen. This brings us to the end of the presentation. The floor is now open for question and answer. Should you wish to ask a question, please unmute your phone or computer at this time and speak. We would like to ask that you indicate your name and company as you ask questions. Thank you. Ladies and gentlemen, the floor is now open for questions. Thank you.
Okay. Good afternoon, everyone. Can you hear me?
Yes.
Hello. Yes.
Yes,
okay. My name is Nkem from EY. Nkem from EY. So I think that the performance over the period was actually very good. Well, I mean, it's quite attractive. So I just want to find out, based on some things you mentioned in the presentation, you had a negative ROA and ROE, and you mentioned it was due to decreases in investment, other income, and growth in operating expenses. But when I'm looking at the investment, I was thinking that's where the major dip is coming from. But looking at it, I found that investment year on year actually increased. I mean, there was a decrease in treasury bills, but increase in bonds. So can you just elaborate on where exactly the dipping came from, or the decline came from? And secondly, in line with this new NICOM regulations, how does this affect you? I mean, I know that you have a business model for more of an acquirer than a target. So have you considered that? How does that change our business model going forward, considering the next financial year? Thank you very much.
Thank you very much. I would ask the Chief Financial Officer to take the first question, then I'll take the second question. Shane.
Thank you, Ikem, for your question. For the investment portfolio, what's actually resulted in the decline in yields in our investment portfolio is basically as a result of the decline in the yields in the market in the fixed income securities and also the money market placements. So what we are trying to do as a company is to ensure that we look for other investment opportunities.
Okay.
We're able to make up for the decline.
Okay. Okay, that's fine.
And to your second question on the capitalization. As of December 31, 2017, Wapic Insurance PLC, with our capital base of 15.4 billion, we fell into the Tier 1 category. So we're one of only 7 companies that made the Tier 1 category based on the current guidelines and model.
Yes.
Based on our business model, we are looking at other opportunities within the, given the development, in order to enhance our position within the Tier 1 space.
Okay. Okay, so are you considering any targets? Do you have any plans for acquisition based on this new guideline?
At this point, I'm unable to disclose that, but would say that we will unveil our plans as we perfect the analysis that we're doing currently. But you can bet that we'll take the position that we consider best fit for the organization.
Yes, very true. Thank you very much, Nation. Thank you. I appreciate it.
Ladies and gentlemen, we'd like to take further questions if there are any. Thank you. Are there any further questions, ladies and gentlemen? We'll be glad to, or clarification, we'll be glad to provide that. Ladies and gentlemen, there are no further questions. We would like to thank you for your participation at this session. We look forward to having you on board again when we present the full year or the Q3 and the full year 2018 results. Thank you very much and do have a lovely afternoon. Bye.
Thank you very much.